Good afternoon, traders and investors. Will back here with another one. What a beautiful day in the markets as bulls continue their march higher, guys. Now pretty much 8 days of trading in the green for the bulls. So we absolutely love to see it. And bulls breaking some very key levels today on QQQ. QQQ has been pretty much our lead bull throughout this entire rally. And as long as big tech does not start pulling back, guys, the broad market pullback will not be occurring. So we need to see big tech pulling back before our indexes most likely will pull back as well. But that's perfect for all of us long-term bulls, guys. The markets are green and pretty much I cannot complain here. So today I have a very nice video for you guys. We're going to go over a few earnings. We have earnings from Rivian, Uber. We also have Celcius Holdings, guys, one of my favorite stocks in the market right now in terms of growth, the energy drink company, right? And then we lastly have Datadog. So a few earnings to cover today. We're then going to cover our major technical analysis here on our major indexes and our major tech names, guys. And lastly, I will give you a small portfolio update because I did add a few new positions here and I always want to give you guys the new positions as soon as I open them. Not much has changed, just 2 new little positions. So we'll cover that in the end of the video, guys. So without further ado, let's get right into today's video, guys. So SPY up 0.28%, QQQ up 0.95%, and the rest of the index is quite mixed here. XLF, you can see a bit down, healthcare lightly up, and IWM pulling back ever so slightly. So some indexes have started their consolidation, but QQQ remains very strong. Now let's take a look at the heat map, guys. You will see that once again, market led by big tech here. The rest of the market, however, especially energy, big red here today, which is good for overall inflation data. Not so good for the general market performance here, but that is fine, guys. Fairly mixed market on the day. You can see, though, a lot of names starting to go red. So although big tech is not pulling back, we do have a lot of the rest of the market starting to slightly pull back here. So that is worth noting. Now, on the one-day relative performance, you can also see that the market was fairly mixed here today. Let me just refresh this. Right? You can see half the market in the green and half the market in the red here, guys. But just technology and consumer cyclicals here, right? Our major tech names just leading the way and pushing the market green. But a few major indexes are performing to the downside here. On the 1 week relative, everything still in the green except for energy. So this is very good market performance, guys. Nothing to complain about. I am very happy for the bulls in this circumstance, guys. And we're coming really recapturing some of these key levels here. And the probabilities at this point, guys, of the bulls being able to set the daily uptrends are extremely high. With the more that they come up like this, guys, the more the probabilities favor a daily trend change here and into also weekly trend changes into the end of the year. So very happy with our bulls performance. But before we get into more technical analysis, let's start off with some earnings, shall we? So first, going to take a look at Rivian. One of my favorite EV plays, although they're not as profitable yet, they are one of my favorite EV plays in terms of growth and in terms of consumers liking the product that Rivian is putting out here. So in the after hours, you can see Rivian actually up a decent amount here, guys, almost 5% in the after hours here. They did miss ever so slightly on earnings here on EPS by about 7%, but reported slightly increased revenue. But the key was in the guidance, guys, and Rivian doing a great job at cost management and guiding up in terms of deliveries here. So let's take a very brief look at their earnings. You will see Rivian raises full year production forecast, shares rise. So they didn't raise it by that much, but it was still a raise. You'll see here that they raised the production forecast for the full year by 2,000 vehicles to 54,000 units on the back of sustained demand for its trucks and SUVs. It was very good, guys. This is exactly what you want to see, increased demand for their product. In my opinion, guys, Rivian makes very beautiful products. If you haven't seen their SUVs or their pickup trucks, I highly recommend you go and check them out because they are very nice in terms of design and in terms of utility functions here. So very good report by Rivian here. I like to see the guides up here. Obviously, right, not in line with exactly what happened with Tesla or Lucid. You can see the comparison down here, right? And Rivian pretty much coming out and saying, nope, macroeconomic conditions are, dire right now for the EV market, but we continue to be bullish in terms of our guidance here, right? So CEO pretty much said right here, I'm actually surprised, to be honest, at how much we've seen others pull back. So a little bit of a shout out here towards Tesla and towards Lucid here, but very good here, guys, right? After multiple quarters of supply chain problems that hurt production and battered its stock, Rivian may be starting to turn a corner. The company on Tuesday trimmed its capital expenses and lost forecasts for the year. This is exactly what we wanted to see in Rivian. because you guys know, guys, that Rivian has not been able to turn a profit yet. Obviously, it's very hard for a new car manufacturer to start turning profits, but what you do want to see is a reduction in your expenses over time, and that's exactly what Rivian is doing very, very well right now. They also have a very decent amount of cash reserves, guys, over $7.5 billion. That is down slightly from their previous $9.5 billion in the past few quarters as they've deployed some of that capital, but still very, very good cash reserves, guys, right? They are burning a fair amount of money here during the year. They burned about $4.5 billion over the course of this year, but that is going to come down. They forecasted that capital expenditures for next year will only be around $1.1 billion. So that is very, very good in terms of cost management by Rivian here, right? So we also see here that Rivian also said on Tuesday it will end its exclusivity deal to largest shareholder Amazon. So they will no longer be an exclusive manufacturer to Amazon for delivery vans, right? For electric delivery vans, opening the door for more customers around the world. They did reiterate their commitment to Amazon, though, reiterated its commitment to fulfilling the order of 100,000 vans to Amazon by 2030. So obviously a very, very big contract for Rivian here, and that is going to be one of their major contracts to deliver, guys. But they are also in talks with a few other manufacturers, such as Walmart here, for manufacturing their EV vans here. So very, very, very good report here by Rivian here. You can see the company reported a net loss of $1.37 billion on the quarter, compared with a loss of $1.72 billion a year earlier. So they're reporting less and less losses. And you can see here the metrics that I was talking about. Cash and cash equivalents of Rivian at the end of September quarter were $7.94 billion, compared with $9.26 in the preceding 3-month period. So, right, so the revenue, the good things about revenue here, the revenue is going up. Deliveries and production and everything like that is going up, right? So revenue is going up, costs are going down, and they still have a very nice margin of free cash flow to be working here to continue operating this business. So that is exactly what you want to see by Rivian here. Not an absolutely outstanding report, but we are moving in the right direction. And I do like Rivian in terms of these lower share prices here. Pretty much $18 all the way down to $14 is the spot that I'm looking to pick some Rivian shares up. And you can see we have been doing that over the past few weeks with some short put options that we got assigned down here, 200 shares. We were able to lower cost basis here to $17.35. Now it is well above that in the after hours, back up in the 18. So looking very, very good on our trade on Rivian. Second, we're going to cover Uber here. So Uber coming out with very, very good earnings, guys. And just to preclude Uber's earnings right here, right? So this was a beat in terms of EPS, very solid beat on EPS here, and a ever so slight miss on revenue, but the amount of rides that Uber is putting out is starting to get quite staggering, guys. You obviously know they've cornered the market in terms of market share for ride sharing services, right? Over and above their competition. And now we can see Uber is very well positioned here to take over the market. And the one thing that we've always been worried about with Uber is kind of what Amazon and Airbnb were facing in their beginnings, guys. They were growing so fast and deploying so much capital that the question was, will they ever become profitable in terms of net income? Well, I can tell you guys that now it is now the second straight quarter of positive net income for Uber here. So you can see in the past, this has been the thing for Uber now. They haven't been able to post consistent profits, but now in the past 2 quarters, they've been able to realize positive net income for 2 quarters in a row. And over the past 4 quarters, pretty much, 3 of the last 4 have been positive net income. So this is what you want to see, guys. Company growing revenue and finally able to start churning a profit here. And that is one of the main reasons for their increase in the during the day here today. You can see Uber up over almost 4% on the day today after very bullish earnings. Take a look at these headlines here. Uber reports 3rd quarter results that miss analysts' expectations, but very good nonetheless here, guys. Company's revenue for the quarter was up 11%, double-digit growth year over year to almost $10 billion, guys. Very, very good for a quarter, right? Almost $10 billion, extremely strong. In a prepared statement, the CEO said Uber's 3rd quarter was very strong and saw accelerations in its gross bookings, trips, and monthly active platform consumers. That is exactly what you want to be seeing here, guys. Increasing revenues, diminishing costs, positive net income here, and still ever growing market for Uber here. So that is exactly what we wanted to see. Very, very decent report by Uber here, even though we did miss slightly here on in terms of revenue here. Very, very good. No real red flags per se on the report so far, right? So you can see here that the results demonstrate that Uber continues to drive profitable growth at scale. That is the important thing, at scale. and why we believe we're positioned well for the journey ahead in good or bad macro environments here. So very, very bullish statements by the CEO. It was a very, very good earnings call. I read the transcript here and really no red flags. The CEO was extremely, extremely bullish on the direction of the company, their ability to cut costs, and their ability to continue to drive net margins to the bottom lines here. You can see mobility, gross bookings here, very, very good in terms of the ride sharing services, right? 17.9 billion, up 31% year over year. Absolutely amazing. And here for your Uber Eats deliveries, right? 16 billion here, up 18% over year. So very, very good double-digit growth in two of their metrics here for year-over-year performance. Extremely, extremely bullish here on Uber, right? And you can see Uber. The last thing that I did want to highlight, guys, if you didn't know this, right? So this is a key thing that is starting to happen now, and it's going to be a shout out to Tesla if ever they can solve their autonomous vehicles here. It took Uber One, its monthly subscription service, to 18 countries last quarter, so ever expanding global market for Uber, and entered in a partnership with Waymo, Google's self-driving car unit, to finally allow passengers in Phoenix to request Uber rides from autonomous vehicles. This is absolutely huge and should not be ignored, guys, right? So we all know that this is going to be the future. And if Tesla can solve this, well, you obviously know where this trend is going, right? It's going to be good for Uber, good for Tesla, and good for self-driving as a whole. So very, very decent report on Uber. I was waiting for the earnings to come out, guys. I did like the stock in the lower 40 area, but I just couldn't bring it upon myself to take a play on it before earnings here, as we were in a slight little dip here. But very, very decent performance by Uber. I just want to see a few more quarters of net profitability for the company. But in terms of where we stand right now, share price right here, I do like it personally myself in the lower $40 range. Not a bad buy currently, guys, in terms of recent historical price action, right? As the company will be growing here. So very, very decent play for the long term. I do think they do have some good growth ahead of them. And now third, we're going to be covering Celcius Holdings, guys. I haven't talked about it much on the channel here, but one of our users, Michael, who comments a lot on my videos here, shout out to you, Michael, for bringing this one up in the comments, guys. I haven't covered this one a lot because it hasn't really been in a dip for pretty much the last 6 months ever since I've started the channel. I like this stock a lot, guys, lower in the 100, 120 down to 100 range, but ever since it's popped up here, the PE ratio is fairly high. But when you put it on a price to earnings growth metric, it's actually not that high considering the growth that they've been delivering in the last few quarters. I think price to earnings growth now stands at 1.71, which is very good. You guys know anything over 1 is still fairly high, but a lot of growth companies do sit between 2 and 3 in terms of PEG ratios here. So fairly decent by Celcius Holdings. And once again, they continue to beat estimates here. Look at this, guys. Massive beat on EPS, 74% beat on EPS, and a 10% beat on revenue. This company's revenue curve and net income curve is really starting to go parabolic in the right direction, and they're starting to really take market share away from their competitors, which are mainly Red Bull here and Monster Energy, right? So they're starting to really gain market share from these guys and starting to really drive some good numbers from the bottom line here. I like this company in the lower 150 area. You guys will see at the end of the video in the portfolio segment. I did take a position on the company earlier today after their earnings here. So very, very bullish on the company as a whole. I do think that this company deserves a price point over the $200 range. Obviously, it's come up a lot in the recent years, but I do believe this company is poised for future growth and massive growth at that, guys. They are valued cheaper than Monster on a relative basis, guys, considering earnings growth. So just keep that in mind, even if the share prices come up a lot. On a fundamental basis, guys, they're actually not that expensive. I like it more towards 150. Let's take a quick look at the earnings here. Celcius stock reverses after high energy Q3 performance, stock split pending. So they do have a stock split, which is going to be pretty much realized here next Wednesday. Pretty much it's a 3-to-1 split for the company. So if you can't, this is going to be really good to be playing options on. If you don't have enough money to write 100 shares for $17,500 currently, well, you can wait and they'll pretty much be in the $50, $60 range at that point. So a little bit easier for an options play for you, right? So here we go here, right? The health-focused energy drink and beverage maker Celcius Holdings reversed lower Tuesday after serving better than expected Q3 results. So a little bit of a turnaround here, guys, but very welcome for dip buying opportunity here. Revenue leapt 104% to $385 million, slowing slightly from its torrid pace of 112% for Q2 results in August. But I mean, over 100% revenue gains is absolutely amazing here, guys. Really, really, really good. Celcius claimed the title for highest selling energy drink on Amazon for the 14-week period ending September 30th. That is absolutely massive, guys, to be biggest on Amazon. And they do have also, shelving space in Walmart and your major retailers such as 7-Eleven as well. So they're all over the place, but to be the biggest on Amazon for the past 14 weeks, which is over 3 months, guys, is very, very, very bullish. Celcius claimed a 21.4% share of the energy drink category over the span, ahead of its rivals, Monster and Red Bull, guys. So watch out for Celcius, guys. They're taking the market by storm. If you don't know them, they market themselves as a healthier option to Monster and Red Bull, which has been the trend, guys, for the past 2 years. Everybody's being more health conscious. So it's normal that these guys are doing a great job at capitalizing on that marketing trend. So very, very good. Celcius is the number 3 energy drink at the US for the 4-week period ending October 8th, with a 10.5% market share, more than doubling the 4.4% share for the same period last year. They are growing absolutely phenomenally, guys. Very, 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 very good here. If you take a look at their 8K form, right, you will see here, guys, that this is pretty much their earnings. I want to zoom in on these numbers, right? So take a look at your year-to-date 2022 and 2023, right? So very, very, very bullish here. In the third quarter, revenue up 104%. Right? Only for North America, 107%. International, 56% growth. Gross margins up from 42% to 50%. Everything moving in the right direction. And on a year-to-date basis, these margins are up 8% from 40 to 48.1. That is very, 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 very bullish, guys. I can't stress it enough. And look at this massive gain on earnings per share, guys. 136% on the quarter-over-quarter, year-over-year comparison. And on a year-to-date comparison, guys, over 180% change in net earnings. So I want to also show you guys their sales growth, right? Look at this sales growth for Celcius Holdings. Absolutely massive in the past 3 years. And they're forecasted to continue to grow even more here, guys. If you take a look at this little forecast here put together by TradingView, you will see. Give me a quick second to get it together here. And I do by annual. Just gonna put it up here, guys, if I can find it real quick. Seems as though I can't find it here, but they are forecasted, guys. Like, their revenue is forecasted for 2020. Look at this revenue curve and look at this EPS curve as well, right? Very, very, very bullish metrics here as a whole, right? So the company is continuing to expand, and that growth curve will continue to expand as well. Celcius, one of my favorite growth stories, guys. They are forecasted to continue growing revenue in the high 50+% range for the foreseeable future here, as they continue to take market share from their rivals, offering a more healthy option for energy drinks, guys. And you guys know the energy drink market, when you can run a company properly, look at Monster Beverage, right? Absolute monster of a stock here, and Celcius Holdings is no different. Currently, guys, they're generating very, very decent margins for the business that they're in here, guys. Now all the way up to almost 16% net margins to the bottom line here. So very, very good performance by Celcius Holdings. And now lastly, guys, we are going to cover the last one, Datadog here. So Datadog, once again, another cybersecurity play. This one doing the complete opposite of Fortinet last week. This one actually up almost 30% on the day after they released earnings earlier this morning, guys, right? So I like Datadog as a company. I really do. They are not the market leader, and they have come down in share price significantly here. I did not want to take a position leading into earnings, but the $80 range was a very good range for this stock. I personally liked it in the 80 all the way down to about 65 range, these lows right here. I was waiting for earnings, and I was waiting for something to potentially happen like Fortinet. They did have a bad quarter last quarter as well, so I was waiting for potentially a dip buying opportunity below $70, but did not get it, guys. They absolutely exploded today, and it was normal. They provided some very, very good earnings, so we'll go over those briefly. Earnings EPS here up 32% and revenue up 4% here, guys. The one main thing that I do have against Datadog is the fact that, yes, they have positive EPS, but they do not have positive net income here. The only reason you're seeing positive EPS and negative net income is because they do use a lot of tax write-offs and one-off item list events here that they can depreciate on the balance sheet to give them positive EPS, but still they are running negative net income here. So not yet a profitable company. I don't doubt that they will be able to become profitable, guys, but just Fortinet is my preferred play because Fortinet is a profitable company, and this company does have a very high market cap to not be profitable yet, right? $33 billion in terms of market cap here, but I do like the company. The company is very solid. The management is very solid, just a bit too rich for me at these current price levels after the pop. If we do come down a little, we will take another look at it here. So we will go over it lightly. The earnings here, Datadog stock surges 28% for its best day ever after cloud company beats estimates and lifts guidance here, guys. Very, very, very good. Co-founder and CEO told analysts on a conference call that AI native customers contributed 2.5% of Datadog's annualized revenue during the quarter. So they are exposed to more AI endeavors here, but you can see that it's a very small percentage of their revenue here. Datadog builds cloud monitoring and security products for small companies and large enterprises here. Very, very decent report here, guys. Company reported quarterly revenue. This is the big one, guys. $550 million, almost up 25% year over year, guys. Very, very good. The growth rate was consistent with the results in the second quarter, guys. So they are continuously growing over 20%. And that's what you want to see for a growth company specifically, is growth of year over year of over 20% and more in terms of a compound annual growth rate, guys. Very, very good. They also bumped the revenue and profit view for the full year here, guys. So they upped it here by about, I would say about 5% here, but it was a very, very good little bump here from 564 all the way up to all the way up from 543 million, guys. So very, very good little revenue bump here, right? In terms of that. And so here's the thing, guys, right? So the one thing that you have to watch out for these security companies is the current environment that we're in. Can they continue to generate revenue? Can they continue to get new clients, even though we're in an environment where a lot of big tech companies are cutting expenses, right? They usually cut software expenses when times start getting a bit rough, when interest rates are high, and when there's fears of a looming recession, companies get a little bit more lean. So the question was, can these security companies continue to provide good earnings and continue to grow their customer base and continue to maintain a lot of these contracts? And for Datadog here, it was this actual case where they were able to do this, guys. Look, Datadog builds cloud monitoring and security products that work with Amazon, so AWS, Google Cloud, and Microsoft Azure. So very, very good. They're able to maintain their contracts with a lot of these very, very big companies, guys. So it is a very, very good print by Datadog as a whole, right? Very, very good bump in revenue here, very good bump in guidance. So I wouldn't be surprised if Datadog is now on its recovery story here, guys. As you can see that we're starting to really now shape up for your daily trend change here and potentially set some of your monthly trend changes as well here after we've been in an extended drawdown period here for pretty much the last 2 years. So very, very good earnings by Datadog. It may just be the time for your turnaround story in security companies here. So that's pretty much everything that I had for the earnings here, guys. So I hope you enjoyed that. Now we're going to take a look here at our major indexes here. So let's get into it right away. Now, SPY up 0.28% here, QQQ 0.95%, but we're approaching the area where we could be encountering some resistance here, guys, right? So yes, 8 trading days in a row to the north is very, very good. Obviously, I'm a long-term bull. I love this, guys, but we can't get complacent with it. We can't forget that the 4-hour timeframes are a bit overbought. So it's getting really tough for me to open large positions, large new positions here when we've rallied so much, and we could very well expect a pullback. The longer this rally continues, the closer and closer we get to an eventual pullback here, guys, right? So just keep that in mind. This is the resistance area. Obviously, the bulls can continue to move higher into this area. That would be best case scenario if they can move up here, all the way here, and then sit on this area. But if they were to reverse here into our moving averages, I would not be surprised. So now is a question of just having good risk management and just being patient with the markets. Even though we were calling for a potential dip in the last 2 days, it has not come yet, which is very good for our long-term portfolios. But short-term trading, you just have to be a bit careful. Obviously, we are just looking for the daily higher low. Anything pretty much above 409.50 is going to be for your daily higher low attempt. So whether we do it above this whole area and sit on it, or whether we start coming back here and start pulling back into the 430 area and set the higher low here and start a second attempt at it, those are both very good scenarios. Why? Because we are now completely reversing our weekly downtrend, right? So very, very heavy weekly downtrend here. And now the bulls are set up perfectly to set up for the weekly trend change and set this monthly bottom here as pretty much October. It's probably going to be your yearly, your monthly, bottom here for this time frame on the monthly here. And we are going to probably be bullish here into the end of the year. I would not be surprised. Now let's look at QQQ. QQQ leading the charge here, guys. QQQ did something today. Very noteworthy. Can you see it? They've now broken above our downtrending channel, guys. This is absolutely huge. Keep in mind, we do have overhead resistance coming in this pocket right here, right? So 375 all the way to 380. If we do pull into there and then come and sit down on this channel, that would be the ideal scenario to really reverse this into a daily uptrend here. I'll remind you guys that this is not a daily uptrend yet. They really need to set the daily higher low and then reverse up to higher levels here. We will have our daily uptrend. But in terms of the weekly, guys, this weekly move is looking absolutely phenomenal here for reversing that weekly time frame and really marking October lows as pretty much the last low before heading higher into the rest of the year. So I'm very, very bullish on QQQ. Big tech continues to outperform. Microsoft is doing absolutely amazing numbers right now. So it remains to be seen, guys. Will we pull back here from this channel here and target our moving averages and set the daily higher low lower? Or will the bulls just continue the course this week here and move into this higher range here, then use this channel as support and set it up there? Those are the two likely scenarios that I will be looking out for on QQQ. But as I said, guys, very, very bullish. The probabilities now of a bear rollover are very, very, very tiny here. I think the bulls have now reversed even the weekly timeframes. So we are looking very bullish for the rest of the year. XLF financials are slightly pulling back here. So you can see the past 3 days of trading, we've pretty much not moved at all on XLF. So XLF holding gains, but not able to push higher. Once again, we're just looking for the daily higher low. This is a very decent little bull flag right here, right? If we do only pull back shallow, set the daily higher low and move higher, that will be very good, guys. If we can crush this 34 level and close above this will be very good. We will completely have engulfed this most recent weekly leg down here. So weekly trend is looking very, very juicy for a weekly trend reversal into the end of the year as well. So keep an eye on XLF, whether we start moving above this right away or we pull back into this little gap area and start targeting the lower 33 area. That would be a likely scenario as well here, but the bulls are looking very, very healthy as a whole, guys. I love to see this recovery on XLF after they've been completely hammered. And this is pretty much due, guys, to your yields. The yields have now come down a lot. Look at this daily downtrend, right? Daily downtrend on your yields, just expecting a lower high and daily downtrend continuation. We've not been below the 26 and the 12 EMA for this long since the month of July. Very notable on long-term yields, and financials have been absolutely loving it. So keep an eye, guys, for the continued trend change on financials. XLV Healthcare putting in a very decent move, guys, at this point, right? Now you can see XLV Healthcare was one of our weakest sectors here, but now they're coming back over 62% of the move here. So we are now setting up the likelihood for a daily trend change, and we are above our 127 to 125 level. I'll reiterate, now the bulls have entirely enough support down here to make this daily trend change reversal here and start taking back a bit more of this weekly, right? So you can see all of our previous sectors have done a great job of engulfing the entire weekly move. XLV is not there yet, right? So 1, 2, 3 legs down. Now we're starting to engulf, but the bulls creating a lot of space off the lows here to get it done, guys. So once again, similar to the rest of the market, step 1 is complete. Now we're just looking for the pullback into daily trend change to the upside. IWM Russell kind of acting like XLF a little bit, right? So pulling back ever so slightly, starting to fill this little gap here all the way down to 170. I like it though. If we continue pulling back on the Russell, I will be looking to write puts in the 168 and 167 level. I do think that's a great area. The bulls have done a great job here of reversing this entire downtrend here, and now we've engulfed it, looking to set up the daily trend change as well, similar to the rest of our indexes. And also on the weekly, guys, on the weekly, let's not forget, right? There's a lot more work to be put in by the bulls here. We are coming into a bit of resistance here at our 12 EMA. So we will see, can they get it done over the next few weeks and start reversing more and more of that and really consolidating this month, October, as being your pretty much lows for the year and start marching higher towards the end of the year here, guys. So still need step number 2. Give me that daily uptrend here, guys. And then we can really start moving to the higher levels. Your next areas of resistance are obviously up in the 176 all the way to 179 levels. And now lastly, Dow Jones here. Dow Jones performing beautifully, coming into our area of resistance, this little green box here, right? So we are starting to slow down ever so slightly on the Dow Jones here. So if we do get a pullback from here, just target these moving averages here, 33.7 all the way down to 33.5 is going to be the pocket that I am personally looking out for the potential daily trend change. At this point, guys, I do believe that the bulls have the daily trend change in the bag. They just need to do it and execute perfectly here, right? So you can see on the weekly, we've engulfed the weekly move, which also leads me to believe that October's monthly low was pretty much the last low for the entire year. And now we are due for making higher highs, right? And starting to really move back towards our 52-week and all-time highs right here. So that is going to be the move to watch out for on the Dow Jones. Just watch for your little pullback. Obviously, if bulls keep continuing, guys, and then come and sit down on this support level. That's the best case scenario. But if they pull back from here, this would not be really bad either. We're just going to pull back, get some more momentum, and try to smash through this resistance area as a whole and really set that daily uptrend in motion. But the weekly is looking excessively healthy, weekly engulfing move. So I do think the bears have now reversed the dailies and the weeklies on all of these indexes, which is exactly what we wanted to see. Now let's move into our major tech names, guys. So major tech, starting it off with Apple. Give me a quick second. So Apple doing a very good job here, guys. I will erase this as I'm no longer in Apple as a position here, guys. So you can see Apple continues its march higher. Once again, over up 1.5%, guys. Completely engulfing this most recent selling leg down. This is the best case scenario. The bulls have created so much space now. Anything above 165 is pretty much just going to be a daily lower high. For any pullback here is going to be for the daily trend change to the north side here, and now completely engulfing the weekly move down. So Apple bulls have recaptured everything, guys. They have the monthly. They're now going to have the weekly as well here. As you can see, we've now engulfed on the weekly, and also they're going to have the daily trend change as well. So bulls quickly recapturing every single major time frame important to shareholders here. So very, very bullish on Apple. Any little pullback here into the higher 170s, I will once again try to be writing some 176, 175 puts in this area. But bulls for now, just absolutely unstoppable, guys. We're at resistance at the 182 level right here. So we will see, can the bulls continue to smash through? We are eventually, however, looking for that pullback. So whenever the pullback does come, I will be looking to buy the dip on Apple. Very healthy price action since earnings. AMD continues to march to the north as well here, guys. So very, very good performance, up 1.5% today, right? So now bulls completely in control here. Now they have the opportunity. If we do get a pullback when this move does top out, we will be looking to sit on the 108 area, this little area right here that's come up in the past. I wouldn't be surprised if bulls use this as a little sit down area. The moving averages will be curling up into there as well. So AMD, if we do pull back into the 108, I may be writing some puts here in the 107 all the way down to 105 pocket here. Just if we do get a little spike down here and I get a sign, I will be riding these higher, but we are looking still for the daily trend change. And now AMD bulls on the weekly are looking very healthy, guys. Weekly engulfing move. This is a weekly trend change to the bulls here, something that hasn't happened since all the way back in May, all the way back here. And now your monthly lows are in on AMD as well. So I'm expecting very good things on AMD for the next 2-3 months. So it is time for me to personally start building a few positions down here as close as possible to the 107, 105 area, which is slightly above my sweet spot here. We do still have a position on this week, but I will be looking to add ever so slightly, but very, very bullish on AMD. And now Amazon here. Amazon once again performing very healthily, guys, 2.13%, almost entirely reversing, right? This entire move down since September here, right? So pretty much like 2 months of negative trading erased in one 8-day rally by Amazon. Completely ridiculous price action by Amazon, but you love to see it. They had the earnings for it, guys. Reiterated that they're returning to profitability and very, very good cost cutting. So you can see on the weekly, fully weekly engulfing move at this point. So the weekly uptrend is going to be resuming for Amazon. As soon as we do get a little pullback here on the daily, and conversely, on the weekly, it'll just be for a weekly higher low here and then higher highs moving on for the rest of the year here. And same thing on the daily. As soon as we do get a pullback, guys, look for the daily higher low, and then we will be pushing north once again, right? So in my opinion, guys, if we do get a heavy pullback, we will be coming down maybe to about the 135 area where you have these moving averages and this previous little resistance area right here, right? So just keep an eye on that for Amazon, but they can obviously keep pushing, guys. We do have another resistance area up here at around 145, 146, which is your 52-week high. So keep an eye on that, guys. And we do have some slight overbought conditions on the 4-hour. So if we do pull back, guys, no red flags whatsoever. We're just looking for the lower high and move higher into 52-week highs. Very, very bullish on Amazon. No red flags. Bulls are in control of everything now. Now moving on to Google. Google having some very, very decent price action. Google did exactly what I wanted to do, guys. Pull up into the 132, 133 range. Why? Because now we have pulled back. We have pulled up a very good percentage. You can see we tapped the 618 mark today, which means that the bulls are set up very nicely for a daily trend change, guys. So now we're above our short-term moving average, the 12 EMA, and we're above these two yellow lines, which is our previous area of support and resistance here. So we're now back above them. If we do pull back on Google, expect bulls to be able to hold this area here, buy the dip, and restart the daily uptrend here. So great job by the bulls here of recapturing a bunch of ground off of this 8-day move. I am going to be looking any pullback here. I will definitely be buying. We'll see if I do the 130 all the way down to 128. This is my little sweet spot that I will be targeting on Google because I do think we have good things for the remainder of the year. And I do think the bulls will be able to reverse a lot of this weekly move here. Maybe not right away. Maybe they'll have to two-step it, but it is coming in my opinion, guys. Google does deserve a higher price as their business was performing very, very well. Their earnings was just not well received by the market, but we can see we are starting to reverse that now. So very, very good move by Google here. Just need to set the daily uptrend here and start recapturing more and more of this gap. And then we will be heading all the way back up to 140. Would not be surprised, guys, if Google is going to end the year in the higher 140, potentially more than that. So just looking to buy the dip on this opportunity by Google. Now let's move down to Meta. So Meta performing very, very decently here today, guys, as well, up another percent as Meta continues its march higher. So similar to the rest of the market, guys, 8 days in a row where we continue to move higher without much consolidation here. So when we do get some consolidation, target this area right here, 310 all the way down to 300. These two yellow lines is going to be the most likely area where I do think Meta has a chance at a bounce opportunity to reset the daily uptrend. Obviously, we were in a daily downtrend. Now the bulls have made an engulfing push. Now we need to see the daily uptrend reset. Very, very healthy on Meta as well. Weekly uptrend is looking to be maintained by the bulls as they were able to reject this 1 day move to the downside, guys. You can see this was after earnings. 1 day of downside, guys, almost an anomaly. And the bulls gobbled it all the way back up. Meta looking very healthy on the monthly. Sideways consolidation and now looking to explode here, guys. If we do crack 330, that will be a new 52-week high. And the Meta bulls will have basically continued the monthly uptrend. So that is the level that I'm watching to the upside, guys. Crack 330 and you have pretty much the resumption of the monthly uptrend. So Meta bulls are in full control of the monthly. They're in control of the weekly as well at this point, putting in enough space, and they are in control of the daily. As soon as we get this daily trend reversal, that will consolidate full control by the bulls. No red flags whatsoever. Just look for a mini pullback as soon as this move tops out. Now let's move down to Microsoft. Microsoft, our lead bull here. Microsoft almost at 52-week highs, guys. 366. Keep an eye on it. That is your 52-week high and also all-time high move by Microsoft here. Very, very, very bullish, guys. Right, so last 8 days of trading, similar to the rest of the market, guys. As soon as this move does pop out, right, we are overbought on the daily here. We are overbought on our lower time frames on the 4-hour here. So keep an eye out for the pullback when it does come. But very, very healthy levels for Microsoft. As soon as we do pull back, just target this lower 350 to 345 area potentially on Microsoft here. Bulls are in full control of everything, guys. Daily uptrend control, weekly uptrend control as well, right? Weekly uptrend reversal, so full weekly control here. Any pullback is for a weekly higher low for continued movement to the upside here. And the monthly chart also, monthly potential breakout. If we do crack 366, guys, monthly breakout potential, in my opinion, throughout the months of November and December, this target probably will be hit here. So bulls in full control of everything. Microsoft, one of our lead bulls, looking very, very healthy. Just tough for me to be buying Microsoft up here. I hope you guys were able to gain some Microsoft shares when it was trading anywhere between 330 down to 310. It was always a buy in my opinion. I was very, very greedy on Microsoft, trying to target 310 down to 285. Didn't quite get there. It's very unfortunate for me, but I hope you guys were able to pick up quite a bit of shares, or at least a couple shares that entire time. No red flags with Microsoft's business whatsoever, performing very healthy. Just watch out for a little daily higher low here when we do pull back. Now let's move on to NVIDIA. NVIDIA continuing its move higher here, up 0.5%. So NVIDIA doing very, very good job here of consolidating gains. So we are reversing the daily uptrend into a daily uptrend here, like I was talking about. Protected the 404 level. This is exactly what you want to see when we do have a pullback, guys. If we as soon as this move tops up here, right, look for this area here. Nothing is really overbought on NVIDIA except for the 4-hour time frame, but daily isn't. So 4 hours slightly overbought, but you guys know it's NVIDIA. It can stay overbought for a while. So whether we start tagging this area of resistance up here, 471, or we pull back right away, I think the result is going to be the same, guys. Target these moving averages down here. 437 is key. It is also our previous horizontal resistance line coming in from these guys right here. So just target this area as an area of likely support for the stock. But NVIDIA doing a great job here, as well as the rest of the semiconductor industry, to really come back from a lot of the negative energy that they were having here in the past 2 months. So just keep an eye on that for NVIDIA. NVIDIA looking very healthy. Earnings coming up here pretty much in 2 weeks, pretty much on the 21st here. So we will see, can they hold in the mid 400s until earnings, and then potentially once again smash potentially highs off of this earnings, or will earnings be priced in this time around? And could we just end up potentially flat on the stock, even though we get bullish earnings? We will see how the market reacts. I'm very curious, but NVIDIA creating a lot of space off the lows, and that's what you want to see. And now moving on to Tesla. So Tesla here doing a good job here, guys, of holding up pretty much during the day. Tesla not really pulling back as much as I wanted to personally for some of my put options. I'll remind you, I'm looking for put options. Pretty much 205 down to 200 is my area, but not giving a lot back. Tesla bulls, very, very good here. Tesla bulls, I'll remind you, we're trying to reverse this daily downtrend into a daily uptrend. So good little bull flag here by the bulls, rejecting nicely off the 12 EMA. We will see, can they do it, guys? At this point, at a break of 226, will just be a new daily uptrend for the bulls, and then we'll be targeting resistances between 235 and 240, this little area right here. So just keep an eye on that. Great performance by Tesla bulls here. Any pullback is still looking for a daily higher low. Anything above 193 is just going to be potential for a daily higher low for continuation of the upside. And then we'll see how much of this weekly move we can get back, guys. But keep in mind, 235 to 240 is your next area of resistance for your bulls. Looking healthy on Tesla, guys. Tesla still in my sweet spot, 230 down to 210, still in my sweet spot. So as long as we stay in here, guys, right, as the week advances, if we don't get another day, I may start getting a little bit greedy on Tesla and start writing some options, guys. 215 down to 210, because this entire space is my sweet spot. So just keep an eye on Tesla. Decent buying opportunity for the long term, in my opinion, still. Now, our two last ones, Palantir and PayPal. Palantir here selling off here intraday here, but still able to gain 1.4% on the day here. So once again, we're still looking for just a daily higher low. I was referencing this area, guys, $18.40 down to $18 is your most likely area of support here. So keep an eye on that for the bulls. Just looking for a daily bull flag into potential furtherance of the daily uptrend here. Bulls are looking very, very healthy on the daily. Tons of space created after your earnings. So just keep an eye on the little pullback for a daily uptrend. No red flags, no reason to sell shares. In my opinion, guys, this company is going to perform beautifully over the next 3, 6, 9, 12, 24 months. Very bullish opportunity on Palantir still. The bulls, full control of your weekly time frame as well. No red flags either. And on the monthly, guys, I'll remind you that we are most likely going to set the first monthly uptrend in the history of Palantir since it's become a publicly traded company. A break of 20.25 would be your first monthly uptrend. So that would be absolutely huge for the bulls if that happens. In my opinion, it is very likely to happen as there is really no red flags and no negative catalysts on Palantir for the moment. Only bullish revenues, bullish net income, and bullish guidance for the company. So keep an eye on Palantir. And now PayPal. PayPal recovering slightly intraday here, but ending pretty much flat here. So they did start the morning off negative and then went a bit higher and then ending right in the middle here. So we are still looking for our daily higher low. Pretty much anything above 50.4 is just going to be for a daily higher low for a trend change attempt. I like seeing them protect this 12 EMA here. We have not been able to protect this 12 EMA since all the way back here in August and September, guys. So this is step number one. Need to see the daily uptrend reversal for PayPal here, and then I need to see them push up into the $60 and recapture a lot of this previous support area, which is now going to be resistant. So I'll need to see a couple big days from PayPal to get them into the $60 range, and then we could potentially talk about the potential of a weekly trend reversal setup, similar to the same one we had back here in May. As you can see, though, guys, it does take quite some time for PayPal to do this because it does not move a lot. The only big day after earnings, guys, 6.5%. If not, you get a lot of these 1-2% days on PayPal. It does not fly as much as it should anymore here. Still looking for institutional rotation, however. So we will keep a close eye to see if PayPal can really start realizing some of this daily uptrend here and start recapturing some of this weekly. But obviously PayPal, one of our weakest tech stocks in the entire market, but I do like it at these valuations here, guys. So that is pretty much everything that I had for you guys today on the video. I hope you guys really enjoyed it. We'll do the portfolio tomorrow, guys. Video is a bit long for today, and it signed me out once again here, guys. So I will pretty much end the video right here. I hope you guys enjoyed it. And if you did enjoy it, guys, consider liking the video. The new positions that I did have for today, guys, there are only 2, so we'll cover them tomorrow. If I do open more tomorrow, which is likely going to be the case, we will cover everything tomorrow, guys. Not much has changed. However, guys, still light on the week as I am expecting the pullback. So if you like the video, consider clicking that like button. Really helps me out. And if you're new here, consider subscribing to the channel. We would love to have you here. Almost 450 subscribers, guys. Could not be happier. And as always, if you have any questions, leave them down below in the comments. Macro, stocks, options, I got you guys. I'll answer you within the first 24 hours. So take care, guys. I'll see you guys after the close tomorrow, and peace.